Again, our people, Luke here from LAGFX. We're back today with a new top trades of the week video. In today's video, we're going to be going over the NASDAQ 100. This was a short position that we placed about 2 weeks ago, and it lasted for about 9 days. Over the course of the 9 days, we were able to generate over 22 RR from this position. Now, this trade in terms of length, in terms of pips, was over 7,000 pips, which is an amazing trade. And it's something that we predicted and we've had predicted for a very long time. If you are new to this channel, I would suggest looking at our Sunday sessions videos, because during those videos we discuss the future price action and how we feel price is going to play over the course of the next few weeks. And this kind of gives you guys the ability to go and mark out zones and areas for yourself, apply them to your own charts, and then obviously take advantage of the trades that we are placing that generate us with returns just like this. So yeah, as I say, if you haven't checked out the Sunday sessions videos, the analysis prior to this this trade playing out, go and check it out for yourself, just so you can see that it is genuine. It's a genuine trade that was sent out, and there was real analysis that had been put behind this as well. What I will do actually is I will throw up a snippet from the Sunday sessions videos in and around this time, just so you could see the analysis beforehand and what I was looking for, and then from that you can see that price has played out exactly as we predicted. As you can see, price is playing out extremely well. I think this trade is running about 2,200 pips. What I'll do is I'll throw up the trade entry that I sent out to the guys, as well as the most recent update, just so you can see that this is an authentic trade that we're running on at the moment. And it's also, I think it's trading about 14%. What I'm going to be doing as well is throughout this video, I will be posting befores, durings and afters of the analysis that I provide to the VIP clients, just so you can see the type of clarity as well as the type of analysis that we provide in the VIP chats. I think it's very important to showcase how in depth we go when it comes to analyzing and explaining the markets. We don't just want to provide you guys with potential trading opportunities. We want to actually teach you exactly how we are finding positions like this. There's a famous quote out there: you can give a man a fish and feed him for a day, or you can teach a man to fish and feed him for a lifetime. That is something that I stand by, and it's something that I put forward when it comes to LAGFX as a whole, the services I provide. I don't want to just provide you guys with trades that are going to feed you temporarily. I actually want to teach you guys how to trade, so you can have a skill for a lifetime and you can go off and make your own bread and make your own money through this industry. So that's exactly what we do over in the VIP chats. Now, if you're new to the Top Trade of the Week videos, what we do is we basically give you a complete rundown on how the trade played out, some of the analysis that we were looking at, and then obviously highlight those updates. The reason why we have created this playlist is to basically just showcase some of the brilliant trades that we have offered and we have presented to our clients over the period of the last few years. Now, if you guys do go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. If you have any questions or queries regarding the analysis we go through today or the trade itself, leave them in the comments below. And if there are any videos that you want us to create over the course of the next few weeks, leave them in the comments below as well. Any ideas on trading videos, learn to trade videos, things of that nature, leave them in the comments and we'll be sure to get those created. Now, with all that blabbering on, let's jump straight into today's Top Trades of the Week video. So as I mentioned earlier, this was a trade that was placed about 2 weeks ago, lasted just shy of 9 days, and generated us with a 1 to 22 risk reward ratio. That was from start to finish. If you're risking 1%, you're obviously looking at 22% in returns. If you are someone who risks 2% of your equity, you are looking at 44% returns from this position. So nearly half of your equity from one trade, which is absolutely amazing. Now, the reason for this trade itself, if we just zoom out, I'm just going to first go to the 4-hour time frames, just so you guys can get a better picture on my analysis and the reason why I'm expecting price to go bearish with a longer term bias. You can see here that price penetrated a higher time frame supply zone. This is a supply zone that I've had marked out for a very long time. And you can see the unmitigated area and the order block that was left over by institutions. You can see that price traded perfectly into this. If we just go straight back over here, you can see that price traded perfectly into this, cleared that area of supply, and due to that, supply was introduced, demand was taken away from the market, and this delivered us with a break of structure to the downside. This here is a break of structure because this low comes lower than the last protected low. You might be wondering, why is this the last protected low? Because this low here created this high up here. So because of that, this is the last protected low. Now, when we saw that price traded down and actually traded beneath this last protected low, we are no longer following the laws of bullish structure, because as we know, in the laws of bullishness, we protect the lows where they're not broken and we break the highs, right? Now, in bearish structure, we do the opposite. So we break the lows get broken to create a new lower low, and we protect the highs, right? And that's exactly what we saw here. We broke the low, being this one, and we protected the high because we had a new lower high created. So because we were delivered with a penetration of a valid supply zone that introduced supply and demand was cleared from the market, that obviously gave us that S&D flip. We had confirmation of that S&D flip via a break of structure. So we had two pieces of confluence to suggest an S&D flip to the downside. We then saw that price traded into a fractal supply zone that had been left over from the impulsive wave that broke the structure initially. We then saw price trade into that, deliver us with another break of structure to the downside, and then we were delivered with bearishness. This was a trade that we also placed earlier on in September. Now, the trade obviously we're going over today is this one here. Now, as we come to this trade, the reason why we entered was because we saw that price created a new low here, breaking that structure initially. Then what was followed was a lower high. What followed after that, a lower low. So we saw that we had the deliverance of clear bearish structure. So we have a high set, followed by a low, followed by a lower high, followed by a lower low. Now, because of that, we had all the confirmation we needed that price was, in fact, in a bearish trend. We had a break of structure to the downside, we had a penetration of a higher time frame supply zone, and then we had the markets actually respecting the laws of bearishness. So what follows after an impulsive wave? A corrective wave. So we understood that price had to put in that correction to trade us back up and into a fractal supply zone that had been left over in the markets for price to trade up to create that new lower high, right? So what I did was I marked out 3 potential areas of supply that I thought price may come to trade up and into. Price traded up and into this first one here and actually traded above it. So that invalidated that setup. There was no clear entry for that area in price. We then marked out this one here. If I just move this to the left, you can see that we have a wick to the downside followed by a wick to the upside. That suggests bullish structure inside of that area on the lower time frames. So this is considered a hidden order block. I will be doing a video on hidden order blocks in the coming days, so make sure you keep your eyes out for that. And there was also another area of interest up here that was more fractal, that we didn't actually see price trade up and into. But this was just another key area that we had marked out. Price traded up and into this, which was brilliant. We then saw rejection to the downside. That's exactly what we wanted to see, as that meant enough supply had been introduced to give us that S&D flip again. We then saw that price broke structure to the downside, so we would say this was the last protected low on the fractal timeframes. We just go down to the 1 hour now, just to make this a bit more clearer for you all. You can see here that we were delivered with that break of structure. Brilliant. What did we then want to see? Well, we then wanted to see price come back up to correct itself. The reason why we wanted to see price come back up to correct itself was to trade us into a fractal area of supply. So this is our 3rd supply zone, and then this is where we would obviously be looking to enter. So if we just go back, you can see here that price traded in to our first higher time frame supply zone. We were delivered with bearishness. That's brilliant. We then saw a second area of supply. After the initial impulsive wave, price came back up to clear that area in price, Brilliant. That was our second supply zone. We then saw price break structure to the downside again, creating a new low. This gave us the confirmation that this corrective wave here had finished and that the new impulsive wave was ready to take place. We then looked at the impulsive wave that broke the structure, being from here to here. We found an area of supply, which was this right here, and we waited for price to trade in. Now, if we go down to the 30 minutes, the area of supply will actually present itself to us. So you can see here that it's actually on the 5-minute time frames. We marked this area out. Again, we had that knot-like look in this impulsive wave that traded us lower. So we had the wick to the downside followed by the wick to the upside. That suggests bullish structure on the fractal nature of this market. We then saw price trade up and into this. We then saw that supply was introduced. We cleared that area of any supply. We closed any buy positions that may have been placed within this bullish correction. And from there, we saw price trade us lower. Now, when it came to our entry for this position, we actually looked to enter in on this trade as soon as we saw that price traded down like so, creating this large bearish engulfing candle. This told us that enough supply had been introduced to break any previous lows that had been set within this. We saw that it was very wicky to the upside, which told us that it was clearing any remaining liquidity and it was trading into the area of supply to introduce that supply. And we had plenty of pieces of confirmation to confirm that this market was in fact trading us bearish. So what we did is we set our parameters and we jumped in on this position. Now you can see here that what was left was an unmitigated area in price, right? So an order block was actually left over within this bearish leg that began here. So for those who missed out on the original position, a new opportunity was actually presented, and you can see that price traded into this perfectly. It just came to wick in and then delivered us with that next bearish impulsive wave. So there was plenty of opportunity to get involved in this market just by understanding the supply and demand balance, as well as having a good understanding on order blocks and price action. Now, throughout the video, I will have shown the befores, durings, and afters of the analysis and the updates that I sent out to the clients. It's very important that we manage our trades accordingly. I always suggest taking a partial around 3 RR, and the reason for that is if we take a 50% partial, let's say at 3 RR, we are guaranteed to walk away with 1 RR regardless of the outcome. If we moved our stop loss to entry, we would be walking away with 1.5. However, if we left our stop loss where it was, we would walk away with a 1 RR return if price went on to hit our stop loss. Reason being is because we only have 0.5 RR left running on the position. That then takes us out at stop loss when we had already banked 1.5 RR. So 1.5 minus 0.5 is obviously 1. So we still walk away with 1 RR, which could be 1 or 2% dependent on your risk management. Now you can see here that throughout this trade, we were delivered with very little drawdown, and this is because we chose our point of entry at a perfect position. Now again, this is all down to having great understanding in supply and demand, as well as waiting for multiple pieces of confluence to obviously back the trade that we are placing. I would not have placed this trade in the way that I did if the prevailing trend wasn't in agreement with the direction we were wanting to trade. Because this was a bearish market and we had full confluence that price was trading us in a bearish way, we were backed by the majority traders. So as soon as price traded into an area of supply, we understood that that supply and demand balance would probably be in favor of the supply. Now, when there's more supply in the market, we can obviously expect price to trade lower, and the opposite applies with demand. So when there's more demand in the market, we expect an increase in value of any currency pair or any commodity CFD that we are looking at. Now you'll see here that there was actually a second trading opportunity as well that I marked out here. This was something that I actually sent out to the clients. So for those that missed the original entry, or the first 2 entries that were given, there was still an opportunity to get involved in short positions in this market. So everyone in the VIP chat and all the clients that had access to this potential trade shouldn't have missed out on this bearish opportunity. Now you may be wondering what are my thoughts for the coming days, weeks and months for this pair. I am expecting this pair to deliver us with further bearish structure. I do want to see the 8,000 mark, and I am expecting to see that maybe early next year, maybe sooner. This all depends on how volatile and how much volume is introduced into this market. But I truly believe that we will see that 8,000 mark. You can see how prices continue to deliver us with clear bearish structure, and price has now actually gone on to create a new lower low, coming lower than the last one. So we're still being delivered with that clear bearish structure. Now, the good thing for you guys is that there are two areas of interest here that I've marked out for you all. So what I would do if you're watching this video is pause it now and mark these out for yourself, as these are going to be the next points of interest that I am looking to go short from. So once price trades in, we want to see great rejection to the downside. We want to be delivered with breaks of structure to the downside, as this suggests any corrective waves that have traded us bullish into this market and into these area of interest have finished, and the next impulsive wave trading us lower is ready to take place. Now, obviously, we have the opportunity to get involved in bullish positions, taking advantage of the corrective waves that trade us into these areas of supply. However, this would be trading against the overall prevailing trend, and I therefore don't really want to risk my equity trading against this market. I understand how volatile this market can be, and I understand the volume that is introduced at times where fundamentals are high. So due to that reason, I will be holding off from placing any positions in a bullish way, and I'll just be waiting for my bearish opportunities. There are plenty of other markets that I'm looking at, like the Euro USD, the gold, Great British Pound to the USD, and plenty of other major pairs that we can look to capitalize on whilst we wait for our next big NASDAQ trade. Now, that is actually going to summarize this top trades of the week video. I hope you guys have enjoyed. I've been quite brief with my presentation on this actual trade, but I've thrown up befores, durings, and afters, as well as the actual trade itself that was sent out. I should have thrown up a little clip as well from a Sunday Sessions video actually explaining my analysis before it played out, so you can see that this is a genuine trade. This is something that we sent out to the clients. As I said to you guys earlier, if you have any questions regarding the analysis, anything that you may be unsure about, my reasoning behind things, please leave them in the comments below. I'll get back to you as soon as possible. And if you have enjoyed this video, don't forget to leave it a thumbs up. Another thing just to take note of, if you haven't marked out these zones for yourself, please pause the video now, mark out these zones, as these are going to be areas that we are looking to get involved from in the coming weeks and months. There is no harm in marking out these areas. If you are delivered with the right confirmation, it follows your trading criteria, get yourself involved and profit with the LAGFX team. Now, I just want to say a massive thank you guys for watching, and we'll catch you all in the next one.